Go.
Welcome to the Capitalist Sage Podcast. We are here to bring you advice and tips from seasoned pros and experts to help you improve your business. I'm Karl Barham with Transworld Business Advisors, and my co-host is Rico Figliolini with Mighty Rockets Digital Marketing and the publisher, the Peachtree magazine. Hey Rico, how you doing?
Hey, Karl. Great.
Why don't you introduce some of our sponsors today?
Sure. I want to introduce our lead sponsor for the first time, Hargray Fiber. They are a business that is very unique to this area, to Peachtree Corners, the city of Peachtree Corners, actually. They just moved in a little while ago. So their philosophy is that every business is unique, that they craft customized solutions for hundreds of businesses here in the Southeast. They're based out of Savannah. They're looking to work with small businesses to create affordable, bundleable services on either that level or even enterprise business level, where they can talk about managed bundled sites, full suites of managed IT services, and all that. So they customize a solution for every business that needs fiber cable. And they're our sponsor. Thank you for doing that. No matter what industry, though, you're in, you should take a look at them. They can do internet, TV, and phone solutions, and they can meet your local need and be local. So you're not dealing with a cable company that then you have to call some service and they might or might not show up.
Well, they're in the perfect spot. If they're looking at growth for business, Peachtree Corners has a lot going there. Atlanta Tech Park and Curiosity Lab and all the businesses that are joining the community. So glad to have them on board as a sponsor and also a member of the business community.
And the other thing too, Atlanta Tech Park, right? We're here in the podcast studios of Atlanta Tech Park in the city of Peachtree Corners.
Yep. Wonderful co-working space for folks that are building their business. There's 70 plus companies here, events held here throughout. We have a network of resources available to entrepreneurs to be able to leverage to grow their business in Atlanta Tech Park. So right here in Technology Park in Peachtree Corners, come check out Atlanta Tech Park. Well, today's guest is Anita Davis. She is the founder and president of and chief funding matchmaker of Praxis Strategic Solutions. It's a consulting firm that helps companies fund business expansions and also they're able to help support corporate and government customers in training people on funding and business, etc. So really thankful to have you join us today. And today's topic we want to talk about, it really relates to funding your business growth. Anybody that knows and owns a business knows that to grow a business takes input of resources, both capital and people and time and strategies. But right now, if you're looking at beginning of 2020, it's the time to look at what are the funding needs you're going to need over the next year. And we're here to talk about the different options that are available from SBA to some alternative and some of the things you should be thinking about and misconceptions of funding, seeking bank funding for your endeavors. So, Anita, why don't you tell us a little bit about how you got into this?
Thank you so much for having me. First of all, it's a pleasure to be here and always talking about money. I am the money lady, so I love money. I used to be a banker for 20 years, a business banker and a commercial lender, and so that is where my passion has come from. I started my own firm 4 years ago under the name Business to Banker Connection because I connect people with money and I navigate the funding process for my clients. My passion is to make sure that small businesses that are intimidated by the process of acquiring capital to grow their companies have somebody to navigate that for them. Most of my companies that I work with, Karl and Rico, they are small companies and they don't have a CFO in place to navigate that for them. So they hire me to take care of that process for them, and I make sure that I can direct them directly to the places that's going to give them the capital that they need to grow.
Oh, that's fabulous. It's interesting when you start thinking about lending. What are some of should people start considering whether or not they need to reach out to a bank to start funding? What would be your recommendation?
So you need to know when you have expired your capacity to internally manage that growth. When you have more clients than you can fund their needs, or you're expanding, you need equipment, or maybe you're growing and you need to add staff and space, that will require some outside funding solutions. So when you can no longer internally generate enough to run the business and or scale the company, then you need to start thinking about your capital structure and where you're going to go for that funding.
Do you often hear the saying that, every funding decision from a banker is a risk decision? Can you explain what that really means when people start talking about risk and funding? What are banks looking at?
So when I'm working with my clients, that's the first thing that we talk about. Every decision, whether it's bank funding or whether it's any external non-traditional funding, every funding decision is really a risk decision. And that risk decision surrounds what is the likelihood that this company is going to default and not pay us back. And then the second question that's always asked is, given a loss, what is the likelihood that given a default, what is the likelihood that we're going to take a loss on this funding opportunity? So most clients don't think about funding from that perspective. They don't think they know, I have a need, this is what I need, and this is what we can do, and they're clear about their position, but they're not really clear that the bank is making a totally different view on it. The view is, what is their history of repayment? Are they stable? And can they support this new funding request that they're making? And so they make that decision with a totally different set of eyes. That eye is on risk.
Well, I was going to say, risk is relevant, right? Perspective, I guess. So every business owner thinks they're doing really well, maybe. Although not everyone's credit report is pristine.
Right.
Everyone looks at a certain rate and say, well, cheap money out there. It's like whatever, 0% from the money fund there, but really you're lending out at a certain rate, maybe 4.25%.
Yep.
A mortgage or more. But individual bankers, business owners, their background may be different. Their credit reports may be different for a variety of reasons. How would that affect the way you would approach something like that for them?
Credit is very important in the funding process, because even if it's a non-traditional solution, credit is going to come into play. Most clients that I work with, actually most people think about it from their experience with their home mortgage. Everybody can understand buying a car or purchasing their home, and they think about funding from that perspective. But business funding is totally different from that. They're not looking at that. Again, they're looking at the risk in the process. And one of the qualifiers that determines whether or not you are a good risk is your credit history, because that's a standardized process. That's standard for everybody in the United States. You have a credit score. If that credit score is at a certain level, then that means you're a good risk decision. If it's below a certain level, then you're probably not as strong of a risk decision. Good risk for that institution. It could be a bank, and it may not be a bank. So even when they are not looking at, say, your performance in your company to determine the qualifications for a lending decision, they're going to look at credit. So that's why I always encourage people, if you're going into business or if you are in business, make sure that part of your business growth strategy is intact. And that if it's not intact, that you're putting in some processes and plans to strengthen that, because it's always going to put you in a better position. So I always encourage my clients to get in the 700 Club and try and stay there. The 700 Club is a good place to be, because it really is a differentiator between whether you're going to get a good pricing on whatever that funding solution is, or you're going to pay a premium. And when you start to pay premiums, that takes out money from your bottom line that you can take home to feed your family and put your kids in school and do all the things that you really want to do.
So it doesn't necessarily negate you from getting a loan, it just negates you from getting the best rate for the loan.
And that depends on how unhealthy that credit score is, because it can negate you, can prevent you from acquiring capital.
Sure.
But if it's not, so 680 is considered a decent and good credit score. 700 is safer, and you're on the road to being really great. And so that determines really what they're going to determine the rate that you're going to pay for your whatever it is that you need.
You're highlighting something that I think a lot of people don't think when they're thinking of starting a business. They start thinking of the idea. They may start looking at a plan, and how they're going to market it and how they're going to sell. But they never look at their personal financial situation.
Right.
And if I were to advise anyone looking to start a business, or even someone that has that owns a business today, it's maybe talking with your financial planner or your people that advise you, and make sure that part is solid. So if you know you've got some hits on your credit, if your debt ratio is off balance, before you ask someone else to lend and invest in you and your business, show that you're able to get control of your own finances and drive your credit score. And that might take 2 or 3 years before you do it, but it's something that everyone could start working on. Know what their score is today, understand what it takes to get in the 700 club, and make those adjustments to their personal lives, budgets, whatever their situation is, so they could be a good risk for a lender.
That's just an accurate way to capitalize that, because it's really important for you to plan for your business, funding your business, because even if it's going to be self-funded to a degree, you're going to have to buy something outside of what you do to make your business run, and every decision is going to cost you money. And so if you don't understand what that cost of capital is, then you're going to end up paying more, or if your credit is not in a position to get you to the best rates that you can, then it's just going to take you longer to pay it off or cost you more in the long run.
So in my world, most businesses that we look to find buyers for and sell are funded through some kind of lending.
Yes.
It's a high in the 75 to 80% are, especially if they get into the larger value. Can you share the various options people have for funding growth or funding an acquisition?
So most people fund acquisitions that I know of and have experience with through bank funding of some sort. In bank funding, you have two different kind of options really with a bank funding. If you are strong, solid, and have a really strong savings account or some kind of investment vehicle, then you can fund that traditionally through conventionally through a traditional loan. But most lenders like to add a SBA guarantee onto that process. So the SBA guarantee does a couple of things. It guarantees that the bank will, if they invest in your bright idea in your company, that if there's a default, again, the risk process, if there's a default, then the bank is guaranteed that they'll get back 75 to 90% of the monies that they lent. The other benefit of looking at it through SBA guarantee, even from the bank's perspective and from the buyer's perspective, is that your cash injection into the loan is less. So your requirement that you have to come up with for a conventional loan is typically going to be 20% of that acquisition. If you are in a riskier business, sometimes they want more than 20% for that acquisition. However, SBA guarantee tacked on to that loan request will minimize bring that cash injection down to 10%, and for a riskier business, another 5%, so maybe 15%. And say a riskier business would be maybe a gas station, a convenience store, car washes, things like that have a special use, hotels, those kinds of business acquisitions really require some additional risk from the lender's standpoint and from the SBA standpoint, so they have a higher cash injection requirement. But if you are solid enough to get a bank acquisition and you have the extra funding, then your rates are probably going to be a little bit lower, because with that additional SBA guarantee comes a little bit of a price hike.
When you think about people buying, their experience with bank lending, it comes with buying a house and mortgage, and you often see people making that mortgage decision a lot around what is the rate they're getting for that loan. They're looking quarter points and a half point. If you're looking at a commercial loan for business, is it the same thing apply? Is the rate the biggest sole determination of who you should lend with and who you should work with, or what would be other factors a business owner should consider?
So rate is very important in terms of just, how much it's going to cost you to maintain and pay the loan over time. However, the biggest thing you want to do when you want to make an acquisition is know, am I able to make this business profitable, and what would those profits look like over time? So you may pay a different rate. So again, the rate structure that you will pay for a personal loan, a mortgage loan, that is not going to be the way they process and review and analyze a decision to make a business acquisition. So the whole process is completely different. They're going to be looking at the cash flow of the business, and is it likely to be stable? And if you're making an acquisition, does your background and your history in that industry lend to you having more success in the business? And so those factors, your historical performance and knowledge in that industry is going to be an important factor when you're making an acquisition. And sometimes that can determine your rate. And then the money that you have to invest, and also your resources that you have after you've made that investment is very, very important, because people say, okay, I can come up with my 10% down, but it's going to suck up every resource that I have in order to be able to do that. So if that's the case, what a lenders want to know is that you're going to have some kind of reserves. Is there something to fall back on in the event that all of those cash flows that came to the business, came to bear when you purchased the business, is that going to automatically transition over time? Because there's usually a difference and a ramp up when you change management, you change ownerships, different styles, different plans, different strategies. All of those things come into play. And so those are some of the factors that you should consider when you're making an acquisition. That's what a lender is going to be looking at when you're making an acquisition as well.
So you think about, we've been using this term SBA, and I should be fair, some people may not be familiar with what that is. The Small Business Administration and the loan. Can you tell us a little bit about the history of that and what that is and how it's helped people get into small businesses?
Yeah, the Small Business Administration is a government entity, and that government entity is designed to help small businesses prosper, to start, to prosper, and to grow and scale. Because really, small businesses really make up the bulk of the economy and job resources available. So since small businesses are running the country, the government has a vested interest in making sure that small businesses succeed. So what they do, the Small Business Administration is not a direct lender. They use outside resources like banks and some other non-bank funding resources to guarantee that in the event that there is a loss, again, the risk, it all is going back to that risk. If there is a loss, that the bank will not have to bear that whole burden, or whoever that funding source is, they won't have to bear the full burden of that loss. The government will come in and back up that loan, and that's a very, very strong mitigant for a lender to have as a resource in the event that there's a challenge with that loan.
Does the SBA then provide a better chance of getting a loan? Like if I went to the bank normally, obviously the rules would be a little bit more stringent on a direct loan from a bank without the SBA guarantee.
Yes.
Does the SBA guarantee sort of make it less stringent?
Yeah, it's considered a mitigant. It mitigates the risk involved with taking on a newer, younger business that may not have been established or is not well established in that
Are there
area.
specific things, though, that SBA will forgive or look over, if you will? Are there specific guidelines that someone can look at and say, oh, okay, well, if I went this SBA route, maybe I need 1 year less financial information. Maybe, is there aside from money going down, maybe?
So you talked about a little bit about the investment. The capital investment is usually less, but also the credit score requirement may be a little bit more flexible if you have an SBA guarantee. The industry maybe a bank may not like that industry, but they would lend in the event that there is an SBA guarantee to shore up that loan. It could be your background. You don't have the lender may not be comfortable enough to lend you conventionally because you don't have enough history in that industry. So a SBA guarantee can be a mitigant. And so usually what I've seen from my history as a banker, when a bank is looking at a mitigant, they will mitigate maybe one shortfall. They're not going to mitigate, you can't have bad credit, no money, bad idea, no history. They're not going to mitigate all of that.
Yeah, right,
But say for
right.
instance, if you have most of the requirements and there's one shortfall that would not allow a bank to be comfortable enough to make a conventional loan to you, then they'll say this SBA can come in and mitigate that risk. Typically, one of the other things that we haven't talked about is collateral. So, the business, the lender's decision, again, we talked about the likelihood of a default and then the probability of a loss given a default. That is what a SBA guarantee is really designed to help shore up that shortfall in collateral. Because most people, when they start a business, they may have some of the resources that they need, but they don't have a lot of collateral to support that. So if you are a business that you're not buying equipment where the equipment is going to be the collateral, or you're not buying a building where the building will be the collateral, I'm buying a business, right? I'm buying a business, and you're getting goodwill for that, the name of that business and maybe their client list. There's nothing for a bank to say that we can fall back on on nothing. There's nothing
On the
there.
building and the equipment.
Right. So the SBA guarantee becomes that mitigant.
So if you think about it, and when I often think about that as well, some business historically had a lot of assets. Maybe it was a building, and the business was, so the building has a value that the bank could lend on. If something happened, they could take the building and sell it to someone else. It could be the equipment. But if you think about in the last 40 years, the shift to service industries, what does a software company, someone that's generating software or e-commerce, have as assets? What does anybody that owns a medical practice or things that's delivering service, beauty salons or these service-oriented? You would think the economy expanded in the service industry so much. How would banks fund those types when they don't have assets? The SBA allows working cash flow for the business to make up some of that. So look, this business is good. It's got a track record, and people are able to fund and pay off the loan. But a traditional bank would say, but I want assets. I want something. And I think that's what the SBA has created to help close the gap.
Well, they might even look at, let's say, a hair salon or a medical practice and say, well, those patients like the practitioner's gone. Will those 80% of that business disappear or melt away, over a year? I can see issues like that.
Yeah. Those are very, very real issues when you're making a decision to make an acquisition. And so they want to know what's going to still be there to stabilize the company. And that's why it's so important for the new owner, the purchaser of that business, to have some background in it. And so, or if they don't have background themselves, that they've hired talent that has the background to manage the day-to-day operations.
And this goes back to what you've taught me, is that you want a business where there's a manager managing the business, essentially, that you're not coming in to do that part of it necessarily. You're coming in there to do the other parts of it.
Yeah, having the infrastructure and the leadership team in place in the business ensures better continuity. So it's not all reliant on just the owner of the business that's generating all of the value in the business. Is key.
I did have another question too. I mean, SBA loan sounds like it's an SBA loan, but are there different various SBA loans? Different levels or different products or structures?
So they probably structures would be, or products you could use either one. But there are several different SBA products that are out here on the market that are available. So if you want a traditional working capital loan, if you're a small business looking for something under $350,000, and in some banks $250,000, they'll lend under the SBA Express product. And that's a product that doesn't require as much collateral. It's usually for younger companies or companies that don't need a great deal of capital. Once you get over that $350,000 mark, then you're probably moving into a larger loan category. That $350,000 up to $5 million will allow you to get a SBA 7A loan, and that loan is designed a lot around working capital. But you can do quite a few other things with it. You can purchase equipment. You can also get real estate with that loan. And it'll allow you to get the working capital needs as well as, say, a building and the equipment that you might need to run the building inside the building with a 7A loan. And then the other product that's very, very attractive, one of my favorites for commercial real estate purchases, the SBA 504 loan. And that loan allows you to have a lower cash injection in it, and it's strictly for business and maybe heavy equipment that might go inside a building that would be maybe attached to the building, as opposed to small pieces of computers. You wouldn't provide that on the.
So real estate, commercial real estate,
Commercial
office
real estate.
industrial, not residential necessarily.
Absolutely not residential.
Okay.
So the SBA does not fund residential use, and it does not fund any residential products. It is SBA is for commercial acquisitions, commercial purchases, commercial activity only.
And there's some industries that they do not fund. Some financials and what are some of the industries that the SBA?
Some of the ones that, so the SBA does have a little bit more flexibility than maybe your average bank that you would see on the corner. They will not fund typically if you are in business to lend money to somebody else. They don't fund that. They don't fund any, what's the right word? Sexual kinds. I can't think of the right.
Adult entertainment.
Adult entertainment. Thank you. That was the word that wouldn't
Yep.
come to my brain. But adult entertainment, they don't fund some of those, and those are restricted and prohibited. They don't fund any businesses if you are renting. So, say for instance, in Atlanta Tech Park, if they wanted, because they lease space out to another tenant, they don't fund those kinds of business. They consider that investment real estate, and they won't fund those.
Interesting.
Yeah. So those are a few that come to mind.
So
I'm sorry, just to piggyback off that. So if I wanted to buy a commercial building, put my business in it, but also rent maybe a couple of spaces out of it to help with the mortgage payments.
That's a good differentiator. So
Okay.
if you are going to operate 51% of the business with your company, that would be the difference where you can lease out the space. As a matter of fact, we're closing on a loan for $1 million acquisition of a building, and she is going to be renting out 49%
Really?
of that to another tenant. So they will allow that, but you have to maintain the majority of that building for your own business.
Square
Yourself.
footage.
Yeah. Square footage is the differentiator.
Yeah, right.
Yes.
are there things that when you work with clients and they go through the SBA process and now they're in underwriting, things that they find out or learn that may cause them pause, things that they could be aware that they may be asked to do or things that they may have to account for that the SBA requires. Are there any things like that you've seen people have pause with?
Absolutely. In this process, the SBA process is beneficial in ways that will allow you to get access to the capital, but is a very stringent process. So the government does a lot of due diligence around making sure that your business is viable and legitimate in order to grow. So credit, I can tell you that, for instance, recently I've experienced companies that have a really good business model and good cash flow, but bad credit from the owners, they will pass. They will pass, or they will make you go through a credit repair process, so it can delay the process. Some of the other things is that they do look at all of your business, all of your resources when you're looking at an SBA loan. So if you have a house that has equity, because they're going to be giving a 70 to 90% guarantee, they're going to take all available assets that you have as a lien. They're going to put a lien on it. So that's something that people, sometimes that gives them heartburn. But it's a true thing, and it's a very real thing that you need to know on the front end. I would hate that somebody gotten in the middle of that process and didn't know that.
Yeah.
You should know that from the first conversation that you're really having.
So in most cases, when you go down that path, they most likely will ask for a personal guarantee that would be secured against all your personal assets in the business.
Absolutely. Personal guarantee is required in typically almost every business loan, whether it's conventional, well, I shouldn't say every, conventional and SBA funding. Some of the outside non-traditional lenders may not require your personal guarantee, but if you're going to look at conventional SBA funding, then you do have to guarantee it personally. Anybody who has 20% or more ownership in the business will have to guarantee. So if you have partners, everybody who owns 20% or more. So I used to tell people, if you're going to get partners, make sure you cut them off at 19%,
Right.
or give them, under 20% so that they won't have to go through that funding process. And they look at any additional businesses that you may have. So some people are going into a second or third business. They're going to look at everything that you have to make sure that your capacity to pay that obligation back is met.
And it doesn't matter the corporate structure. It could be LLC or C corporation. There's no
There's no
difference to that.
differentiation in that in terms of whether you are guaranteed the loan. Yeah, the structure doesn't matter.
Okay. I'm wondering about, as we go into 2020, anything that's trending in the SBA world and lending world that you see coming. What should business owners know about over the next, say, year or so that should impact their decision on when and how and why they should seek funding?
Thank you for asking that question, because I think it's what I'm telling my clients and anybody that I'm in front of and speaking opportunities. I'm asking them to pay a close attention to our economy. The recession that has been teeter-tottering over the last year. We're in a good economy today, but economic cycles happen. So we are due for another economic downturn. Economic cycles. We're in the 10th year of a progressive, robust economic cycle, but it is going to end, and it will probably end soon. And typically, when we have an economic downturn in the country, what happens is credit tightens. So if your company is healthy, like you mentioned earlier, if a customer is thinking about getting capital and they're healthy enough to get capital, they haven't done it yet, this is the time to do it. And also, rates are really, really good right now, but I don't think it's going to be sustained for, indefinite years. So you need to start thinking about that, and you should never wait to get funding until you desperately need it, because you desperately will not get it.
Right.
So you have to be in a healthy position in order to acquire capital. So I think the recession and the economic conditions, the election will impact what rates and what's happening in our economy. Obviously, it always does. And one of the things that I'm particularly an advocate of is for people to understand, when you're looking at easy capital, easy money, some of the online lending, some of those quick and easy resources that you get in the mail. The cost of that capital can be very, very expensive. And people come to me saying, I got a couple of these loans. They were really, really easy for me to get, but now they're in my checking account every day, every week, every month.
Yeah.
And those kinds of capital funding solutions sometimes are not sustainable. I tell people the only time that I would recommend one of those kinds of solutions for funding is if you, for instance, maybe had an opportunity to buy some bulk inventory, and you knew that you can turn that inventory in a short period of time and get in and out of that obligation. Those obligations are designed to just be 12 months long.
Yep.
So if they're so short term, the repayment structure on them is so difficult for most people to maintain. That's the second thing that I would say you should look at as outside of the economy.
You mentioned those loans and that short term. They were originally designed for someone that received a PO for a big order from some big company, and you had to outlay for inventory or get things built and bring in, but you have certainty that you're going to sell them, so you have to fund it. It's expanded to, I need money, and you may not. I got this hit product. I'm going to buy all this inventory, and it's going to sell. And if it doesn't sell, you still owe for that money, and now you've got inventory that you get a discount. So really being careful, and that's where I think planning is, if there's one thing that business owner can do, is develop a robust planning process that includes understanding, projecting the financials of their business. Because through that process, they'll start to discover where they might have cash flow short needs or growth, and how to fund it efficiently at the right time, so they're not in desperate measures, and they can do scenario testing. What if it's 20% more, 20% less? And having those discussions, and having a lender, somebody that's expert in finding, sourcing, funding on their team, advising them on, here are your options. If you decide now, these are your options and these are the potential pros and cons. If you wait to that decision later, your options shrink to these fewer options. And at least if people have that information, they can make better informed decisions.
Yeah, and I agree with that. I'll give you a quick example, because I work with lots of lenders, lots of banks, lots of non-bank lenders across the country. And one of my lending sources that I had that was just 3 months ago, doing unsecured working capital to those 700 club clients that I work with often too. They were doing unsecured credit lines based on your good credit score. Now, because they know that the economic conditions in this country are about to change, now they don't offer that solution. Now you have to bank with them for over 12 months. And then after 12 months, they'll let you look at an unsecured vehicle. So even with your good credit score, now they want to see not only your credit, they want to see your bank balances in their bank for over a period of time. And so what happens is people don't know that the banks and all of these lending sources are already making the decisions about how they're going to restructure and how they're tightening up on that credit. And if you are not prepared, you don't have any projections, you don't have any resources on your team to help you with that, then this is the time to explore where can you get that support.
Well, I'd like to ask a little bit about, if folks wanted to learn more about what you do and how you help clients navigate these waters, what's the best way they can reach you?
The best way to reach me, LinkedIn is a great way to reach me at Anita Davis on LinkedIn, because I'm in the process of rebranding. But you can also give me a call at the company, 770-365-0858. That is a good number to reach me. And look for Praxtra, Praxstra.com. That is my new website as we rebrand.
Oh, excellent. So I'm wondering, what do you have coming up? Do you have anything coming up over the next few weeks and months?
I have lots of things coming up, Karl. I'm teaching a class for SCORE on tomorrow here at Atlanta Tech Park.
Cool.
And we're talking about funding, and we're going to go into a deeper dive conversation over all of the different funding solutions that are available. But I also have other workshops and conversations on podcasts where I'm being invited to speak. And then this summer, I'm working with the WeBank, which is the Women's Enterprise Business National Council that certifies women business owners. They're having a national conference here this summer, and I am on the host committee for that. So it allows me and other women business owners to get access to corporate and government contracting.
Oh,
so lots of great things going on for Praxtra.
Cool.
Well, absolutely. Well, I want to thank you very much, Anita Davis, Chief Funding Matchmaker for Praxis Strategic Solutions, for your time and helping to begin to unravel. I think we're going to have you come back a little bit and we can peel back the onion on some more topics around funding. You provided some great kind of advice and things for people to think about. And I just say to anyone out there that's thinking about their 2020, if they think they might need funding and if they don't know, they can reach out to their advisors. They can contact me, Karl Barham at Transworld Business Advisors. We help business owners help navigate their business strategy, including when they're ready to exit their business. But it's really important to have that discussion, put a plan down on paper, and have these conversations with people that can help get you funding for the businesses that they have. Also want to thank Atlanta Tech Park for hosting the Capitalist Sage podcast. And if you're interested in starting a business, having access to folks like Anita and others here through various forums gives you knowledge and information to be more successful and build networks around that. And also, if you're here, you can meet Rico, who's also here doing a fantastic job with the Peachtree Corner magazine. So why don't you tell us a little bit about what you've got coming up?
Sure. So Peachtree Corners magazine, we're working on the next issue. It'll be out the first week of February. It's a February-March issue. The major feature in that issue is innovative companies in Peachtree Corners.
Nice.
So we'll be discussing half a dozen companies. We've interviewed already about 4 or 5 tech firms, and there'll be an article about some of the other innovative companies here in Peachtree Corners. And a few other good stories in there. So you should pick up a copy. We'll go to our Facebook page. If you're watching the live stream, that would be Peachtree Corners Life, Facebook. And like us on that page if you're listening to the podcast. Go to livinginpeachtreecorners.com and you can find out all sorts of new things going on in the city, and also see the digital edition on there. And if you're looking to, because I do other things, if you're looking to do online content, brandings, social media, video product videos and such, go to mightyrockets.com and maybe I can help you there.
Oh, fabulous. I'd also mention iTunes, iHeartRadio, Spotify, Speaker.
Stitcher, and a
If
bunch
you're a
of other
business owner, I get it. You're busy. I get it. You don't have time to show up at every lecture or workshop and so on. But you do have time in your car if you're in Atlanta to listen to a podcast and learn stuff that could help you improve your business. So with that, I want to thank you for tuning in. Karl Barham and Rico Figliolini for Capitalist Stage Podcast. Thank you.
Thank you, guys. Thanks, Anita.
Absolutely. Thank you for having me.